What's up, everyone? Dylan here. I wanted to hop on and do another episode of the weekly analysis video. As always, I'm going to be talking about recent price action, and then going forward, I'll talk about some key areas to look out for. This video is going to be short and sweet, so with that said, we'll hop right into it. So, S&P, clear uptrend, right? Everyone can see that. Over 2 days this week, from Sunday to Tuesday, the S&P dropped as much as 1.85%. Is the top in? Is this a buyable dip? Let's talk about it. Okay, here are a few things we know. Each dip has been bought. In plain English, whether you like it or not, I am personally bearish on the economy, but I'm not over here being stubborn and trying to short every single pop we get. Okay, I'm very, very selective with my trades, and with that said, I actually bought the dip yesterday. So why did I buy the dip? Let's talk about it. Okay. So yesterday, 8:41 a.m., I posted this. Let's look at this. I posted before it got there, when price was trading 52.67 on the S&P. I highlighted this 52.41 to 52.32 area because it was clear support from, in my opinion, right? I said, ES Visual, this is the main support I see to the downside. If this drop continues, it will be a retest of trend line and demand zone. Okay, so let's look at it on this chart, right? We have a nice demand structure on the 2-hour chart. We'll make that green, and then it also lined up with a nice previous downtrend resistance, which I imagined would turn into support, and that's exactly what occurred. Okay, so despite Dylan being bearish on the economy, I still take some long setups because when I see a valid setup with appealing risk reward and multiple confirmations, I take advantage of it. Okay, so on one hand, we have this support. Okay, I'm going to go over a few different things that I took into consideration when deciding to buy the dip. And then going forward, I'm going to tell you guys what I am looking out for to see if sentiment switches from buying the dip to selling the rip, which will be very, very important in the near term. Okay, I just wanted to scroll, right? Boom, boom, boom. Okay, so you could see here yesterday at 10:01 a.m. I said I bought 52.41s on that quick move down, so I was long. Okay, now let's talk about some of the other information. Okay, SPY. We're going to look at a daily chart on SPY, and we're going to look at the 20-day simple moving average. For whatever reason, algos have been putting buy programs, right? There's been buy programs attached to that 20-day moving average on the daily chart of S&P 500 index, right? 1 dip there, 2 dip there, 3 dip, right? So yesterday, price tested there for the 3rd time in a row, and that's where bulls stepped in. So because it happened 2 times previously, I said, okay, with good risk reward, this might be a good spot to step in on the long side. Okay, so obviously it worked in hindsight, but that was another reason as to why I believe that it was going to be a buyable dip. Okay, on top of that, we have Trading Thomas 3, right? He said SPX and SPY, all the 1% plus gap downs this year, right? You could see every single time SPX has gapped down 1% or more this year, 1 time, 2 time, 3, 4, 5, 6, 7, 8. Yesterday was 8. Every single time, look at the outcome. Rally, 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 right? So I like the saying, it works until it doesn't. I know it's pretty funny when people say that, but it's the truth. That pattern will continue to work until it doesn't. So if it continues to work, Dylan O'Neill will capitalize, in plain English. When it doesn't, I will lose on the trade, but I'll have my stop loss there to protect me. So if it continues to work, right, I will try my best to capitalize, okay? So another thing I wanted to talk about is the US 500. So we just looked at the S&P 500 futures and SPY, right? SPY had the 20-day moving average that it kept bouncing at. SPX had the 1% drops, right, gap downs that continued to get bought, and then the S&P had the 2-hour demand zone and the retest of the trend line. We also have US 500, okay? US 500 had a key breakout above this previous resistance level, right? Let's zoom back, right? We had clear resistance on March 8th, March 14th, and then again on March 20th. Then Wednesday, March 20th, price aggressively broke higher on news. It was the FOMC meeting, right? Now, since that breakout occurred, price has not revisited, okay? And in a pure general rule of thumb in terms of technical analysis, the first retest always has the highest probability of working. Okay, so when you have resistance, 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 strong breakout, chances are the retest back at that level will be bought. And what do you know? That's exactly what happened when? Yesterday. Okay, so you have SPY bouncing at the 20-day moving average. You have the SPX gapping it down 1%. You have the S&P bouncing at a retest of a trend line as well as a demand zone. And then you had the US 500, which is the S&P 500 cash index, the CFD, bouncing exactly at a previous resistance level, okay? So, despite Dylan O'Neill being bearish on the overall economy with rates, right, lingering at high levels and so on and so forth, right? We have inflation pressures, we have commodities rallying, oil, gold, silver, right? All of these different things on a macro theme. This pattern continues to work. So, despite me being bearish on a macro economy level, I will continue to catch this as long as it works. So, going forward, where are we looking? Okay, S&P, very important. We have a key level that actually just got hit before I started recording this. I'm going to go ahead and draw it. It's a double confluence, double confirmation, whatever you want to call it, right? We have a 50% Fibonacci from the drop from Sunday night highs, right? I believe that was Sunday night. Yep, Sunday night highs down to the Tuesday lows, right? Tuesday morning lows. It just hit the 50% Fibonacci. Usually when you have an aggressive trend move, just like we saw from the Sunday highs to Tuesday lows, when you have that aggressive trend, right? Big candle showing aggression from the sell side, the 50% level, right? 50% retracement will tend to act as resistance on, after a downtrend. That's exactly what we just saw within the last hour. Okay. On top of that, that area also doubles up as a consolidation range before the second leg down. So you go ahead and draw a rectangle, right, where the consolidation was, right? See how you have a leg down, you have a drop, base, drop. Okay, so that consolidation area lines up with the fib, and so far it has produced a pullback, right? The S&P rallied up there on recent news, and then it got stuffed right there. Sellers defended that area. So going forward, the bears, if you're a bear, if you're bearish, right, you want price to continue to fail at this general area. Okay, that's technically wise, right? From a pure technical analysis standpoint, that should act as resistance as it just did. If you are a bull, you want to see price get up in here and base, right? You want it to be able to accept, right? Have price acceptance up here and then kind of base and move higher. Okay, that's what you want to see if you're a bull. And then, like I said, if you're a bear, you want it to fail there. Okay, so going even more forward, if that does occur where price does reject here and starts to roll over, in my opinion, this level on the US 500 will be very, very important to gauge overall strength and weakness. If you are a bear, you want price to fall below that 51.85 level and stay below, okay? And if that occurs, you want to see lower highs being printed, okay? You want to see the buying the dip transform to selling the rip. You want to see sentiment change. You want to see the algos start to sell pops as opposed to buying dips. Okay, that is what you want to see. Okay, so if I'm a bear, I want to see price, right, fail at this general consolidation area as it just did, right, and then start to make lower highs. Okay, very, very important. Okay, also, if I'm a bear, I want to see the VIX break out. Okay, excuse these drawings, right? You want to see the VIX ideally stay above 15. So right now it's not above 15, and as a result, the S&P is seen moving higher. Right, it's up 10 handles since the 6 p.m. reopen, right, or since the 4 p.m. settlement. So this 15 level, ideally, if you're a bear, if you're a bear on the S&P, you want to see the VIX above 15. In plain English, these are the futures, the spot futures, right? Going further than that, this key area will be important to watch, right? You have a trend line here, right? It has not seen a close above that trend line ever since I've started to track it in mid-December of 2023. You have one test, two tests, 3, 4, 5 different tests. If you are a bear on the stock market, S&P, NASDAQ, whatever the hell you are a bear on, you want to see VIX futures break above, okay? Because the higher the VIX goes, the more pressure is going to be put on the S&P 500 because you're going to have more demand for SPX puts over a 30-day timeline, and that's good if you're a bear on S&P 500, okay? So that's it. Like I said, short and sweet video. If you guys like it, give it a thumbs up, drop a comment, and those are what I'm looking at. Peace.